Here's the stat that should scare every active investor out there. 90% of professional fund managers fail to beat the S&P 500 over a 15-year period. 90%. And yet millions of people are paying 1%, 2%, even 3% in annual fees for someone to underperform a fund that costs almost nothing. That fund is Vanguard's 500 Index Fund, specifically the Investor Shares class, or VFIAX, and today we're breaking down why this might be the most important investment you've never heard of. Let's start with what you're actually buying here. The Vanguard 500 Index Fund is literally just a basket holding 500 of the largest publicly traded companies in America. Apple, Microsoft, Nvidia, Tesla, Coca-Cola, Amazon, all of them. You're not paying some genius to pick stocks. You're not paying for flashy research teams or Bloomberg terminals. You're buying the entire top 500, tracking the S&P 500 index and calling it a day. And here's where it gets interesting. That simplicity is exactly why it works so well. Now let's talk about investor shares specifically, because this matters. Vanguard has different share classes: Admiral shares, investor shares, ETF shares. Investor shares are the OG version. Lower minimum investment. You can start with like $3,000 instead of $100,000. The expense ratio, 0.03% per year. That means if you're investing $10,000, you're paying $3 a year to own 500 companies. $3. Compare that to the average actively managed fund at 0.65%. That's $65 a year on the same $10,000. Over 30 years, that fee difference alone could be $100,000 in your pocket instead of going to some fund manager's bonus. Here's the pattern interrupt moment. Most people think they need to be active, strategic, constantly researching. They think the path to wealth is complexity, but the actual billionaires, Warren Buffett, Jack Bogle's legacy, literally the smartest investors on the planet, they all say the same thing. Buy index funds, hold forever, don't touch it. Buffett told his estate trustees to put 90% of his wife's inheritance into an S&P 500 index fund. He didn't say, hire a top manager. He said, index fund. That tells you everything. Let me show you the wealth math, because numbers get real here. Say you're 25 years old, and you invest $10,000 in VFIAX today. The S&P 500 has historically returned about 10% annually, sometimes higher, sometimes lower. But let's use 10% as our baseline. After 30 years, that $10,000 becomes roughly $175,000. But wait, that's just the initial $10,000. Now imagine you add $500 a month every single month for those 30 years. That's $180,000 in contributions total. At 10% annual returns, that grows to approximately $1.2 million. $1.2 million. That's not from picking winning stocks. That's not from timing the market. That's from boring, consistent index fund investing with an expense ratio so small it barely moves the needle. Now, the second pattern, interrupt. People think they're missing out because index funds are boring. They're not missing out. They're winning. The people actively trading, chasing hot stocks, paying high fees, they're the ones missing out. The data proves it year after year. And the beauty of VFIAX specifically is that Vanguard is investor-owned. There's no external shareholders demanding maximum profit. The company is structured to serve investors, which is why their fees are the lowest in the industry. One thing to consider: should you buy now or wait for a dip? Here's my take, and this is where being conversational matters. Time in the market beats timing the market almost every single time. If you invest $10,000 today and the market drops 20% tomorrow, sure, you're temporarily down $2,000, but you're still ahead of the person waiting for the perfect moment that never comes. Plus, if you're doing monthly contributions, market crashes are actually gifts. Your $500 buys more shares when prices are lower. Dollar cost averaging smooths out the volatility. The bottom line, Vanguard 500 Index Fund Investor Shares is a wealth-building machine that doesn't require any special skill, any hot tips, or any luck. It requires time, discipline, and a decision to join the boring billionaire club. If you've got $3,000 and you're serious about building wealth, this is the move. Like this video if index funds just clicked for you. Subscribe because we're breaking down more wealth-building strategies every single week. And drop a comment with your biggest money question. Are you a fan of index funds, or are you still chasing individual stocks? Let's talk about it. Thanks for watching, and remember, the best time to invest was 20 years ago. The second best time is today. Disclaimer. This is not financial advice. I am not a licensed financial advisor. Always consult with a qualified financial professional before making any investment decisions. Past performance does not guarantee future results. Index funds carry market risk, including the potential loss of principal.